if we can hear me okay. Let's take a look here. I believe I've gotten rid of the echo. Someone can let me know if it sounds okay. Seems a little quiet. Let's see here. Maybe it's my headphones. Yeah, I think we're okay. So I can turn it higher if you guys can't hear. Let me know. I don't want it to feedback. I guess I can turn it up a little bit. That's the other thing is my cat's very noisy. Um, Ronan assumes that if I'm talking, there must be people here, and since he's a sphinx, he thinks if there's people here that we're all gonna play with him and give him a bunch of attention. So ignore the meowing. My apologies. This is Red Ben Trader, or Red Ben. You can find me on Twitter at Red Ben Trader. If you want to learn more about the algo that I'm using or trade with us in the room, my coach Simon is the one who developed the algo, and he also runs the room. I'm just a member there. I'm not. It's not my room. I'm just. That's where you can find me trading futures any day, and it's also where you can get access to the algo. Now, the algo that I'm using is a lot more complicated than the one that they're using in the room. I started with Simon's algo, and then I've branched out and added some other signals just as I've seen fit. I've changed some colors and tweaked things here and there. So if you're in the room and watching this, you're going to notice that my screens look a lot different than Simon's, but realize most of the signals are actually based on Simon's signals. They might just look a little bit different. And the ones that aren't based on Simon's signals, I can go in a little bit more depth of like where they come from. If they are based on the Trading Perform algo, I don't have access to that code. And honestly, like you don't need to know where it comes from because it's available for purchase. So you can just get it. You don't have to build it. To get the algo or to do a week free in the trading room, email my coach, Simon. It's trade, the letter N, wordperform at gmail.com. Tell him I sent you, that you're interested in checking out the room or the algo or whatever, and he'll give you the lowdown. I think there's one more spot in the room available. Last I checked, I know there was a couple, or there's at least one person doing a free trial this week. So if he joins, I don't know how long it'll be till Simon opens it up again. Simon doesn't like a lot of new people in the room. He wants to be able to give everybody like personal attention, make sure that everyone's caught up and people aren't struggling. So he kind of does this like 2 or 3 at a time. Of course, if someone leaves the room, then there'll be an opening. So you can always get on a waiting list. But anyway, let's take a look at what we're going to do. So I'm looking at this is the 15 tick Renko chart of the NASDAQ. I've got some other charts hiding here that are still NASDAQ, but just different time frames. This one's very small. This one's very large. And then the 24 tick is tradable, small enough that I could actually take entries on signals. But I'm primarily trading the 15 tick. It was actually a little fast today, which is great. It's been really slow. So today it would have made sense if it was printing too fast to like process. You can always move up to like 24 or whatever, like the next level up. There's not really a magical number in my opinion. 4 ticks is a point, so you just have to be able to do the math to figure out like your stop and your target quickly. That's honestly the only, and then you have to be able to process what you're seeing, because as the auction continues, which I'll show you when we open again, but this will move up and down and you'll see signals blinking on and off until it prints, and then once the bar closes, the signal that's there stays there. So if it's going really fast, your brain can get a little overwhelmed. But if it's slow enough, I've been using the 15 tick. And the one thing I really like about this chart is if you look at the size of the bars, even if they're real big like this, like the low of this one is 87.25 and it closed at 98.50. So it's not even 11 points if you got in literally right when it closed and you didn't even wait for a pullback, which you're totally allowed to do. It's recommended not to just mark it in, but you can. But your stop, if you're triggered in here, your stop has to go under the low for most of the signals. There is one exception, and it's a setup that I've personally been struggling to integrate into my system. I'm probably not going to go into it today because I honestly just don't feel confident enough to explain it. But just know that the majority of the signals are going to use either a what we call a 1-bar stop or a 2-bar stop, which would be on a bar with a triangle. So let me see if I can find one here. So this isn't okay. Let's say this right here triggered you into a long. The stop on that technically goes here underneath the bar with the dot and the little flag. That flag here, it only shows up, it doesn't show up right away. It shows us where the previous swing low or swing high was. So you don't see the flag here until this bar prints. So you don't know for sure that that's where it's going to be, but you can tell that it's the lowest low. It's just a question of whether or not this bar takes it out. So if you're trading way up here and you think it's bullish, you get long here and put your stop under here. And then as your trade continues, that apex is going to show up there confirming that your stop is underneath a swing low, which is usually where it belongs. There are exceptions, like I said, and then most of us do trail our stops eventually. My coach, Simon, really doesn't. He prefers to leave his stop where it starts underneath an apex, take profits quickly to pay for that risk between the stop and the entry, for instance. So he'll get like a 1-to-1. So let's say he got in, like he saw this bar and then the triangle print and thought, okay, this is a good spot for a long, which actually makes sense. And I'll show you why in a minute. But your stop in that situation would go at the low. Or sorry, a 1 tick below the low. You can go up to 1 point below, depending on how like trappy it is that day. Sometimes the market just, it's too illiquid to put it 1 tick below the low, and you need to give it at least like 4 ticks. But let's just say 1 tick for now. So we'll put our stop at 83, and then our signal for the, if you were entering on the triangle, which like I said is what's technically valid here, that triangle is valid at 98.50, but you do have maybe 3 ticks of retracement where you could get in. So it's reasonable to think that you could have, maybe a 15-point risk, let's say, pretty consistently with that kind of a setup, even if you waited here and got a little bit of a pullback, you'd have this. So then you'd want to get out of your first contract or your first half or third or whatever, depending on how many you're trading, at about 1-to-1. So right around 15. So you'd be getting out of some of your contracts here, paying for that risk. So now, once you've gotten that covered, you can hold the remainder, and the idea is you've already paid for the risk, so you don't have to move your stop. You can leave your stop kind of where it belongs, where you're like confirmed that your idea is wrong and it's not bullish because it takes this low out. And worst case scenario, if you were trading two contracts and took half off here and left your stop, worst case scenario, you're back to zero, right? You made 13 and or whatever and lost 13, let's say, on the remaining contract because the first one you made your 15, I guess it is. So made 15 and then from your entry lost about 15. So it's about 1 to 1. And then whatever else you get is profits. And if you have a target like the voodoo range or a swing high from previously like this, or maybe a point of these little dots on my chart are different than Simon's, but for me, they're a sign of like a volume pivot, where you had a period before where there was how can I explain this? Like there was some aggression to the upside somewhere in here, but it closed bearish. So that's a reasonable spot to target. And when you got there, yeah, that's pretty much exactly where it goes. When you got there, you just get out. You don't need to trail your stop. You hit your target. And if you look at this, I mean, that trade, for instance, let's say you got 15 plus, what is this white one? 31.50. So I mean, that's still almost 2 to 1, more or less. It's like 2 to 1 on the one contract, and then 1 to 1 on your on the other contract. So you're at the end of the day, you made 1R here, and 1R, and then 2R on the second contract. So the result is actually a 3R gain. And like I said, for NQ, it's $20 per point per contract. So you're if you did it with just two contracts, you're up. What is that? It's 8. Is it 800? 200 for no, it's 15. So let's see. Yeah, it's 2 and then 4. 600. So yeah, I can do math. Sorry. So a $600 move, and the second half was like risk free, if you will, because worst case scenario, it rolled back on you and you went to nothing, went just zero. You didn't lose anything in that situation. Now sometimes they do just stop, like if you got in here and you put your stop here, and it just takes out both of your contracts, and you pay 13 to 15, depending on if it's a 1 bar or a 2 bar stop. Let's say, like, maybe you can say 10 to 15, would be pretty normal. But on two contracts, right? So there, you potentially lose like 400, let's say. But on when you're making at least 600. Well, actually, it's 601, right? So it's 800 for the both of them, I believe. Yeah. So the point is you don't have to have a great win rate to make up for a couple stops. What you have to be careful of is if you're trading like a momentum style, where you're buying breakouts, let's say you thought this was bullish. Yeah. So let's say here you saw that we broke a high. We had a higher low, and then they pulled back and held. That's pretty bullish. So your thinking might be at this point, I don't want to be selling. And if I can get what looks like a breakout here with some volume support, I might want to get long and just hold runners. So the real question is, where would you know that you're wrong? And I'd say in general, that is usually here. That if the price rolls over this like second low that's higher than this low, right? So in a higher time frame, it's a higher low, but on this tiny time frame, it looks like a lower low. Those are often the best momentum trades, particularly when they break out. But if you took this, your stop is only 15 points, let's say, give or take 14. But if you wanted to wait for the breakout, well, now you're going to have a bigger stop, but you're not going to get caught here, right? So you have confirmation by waiting, and you skip that stop. If you thought, hey, I don't have a signal here really, like the star on the one that's not the double star like this isn't really anything. I need a star followed by a white triangle, and it has to be at support. But if this was an entry, and I was thinking I'm going to break out most likely, when it comes down and sweeps you out, you really have no choice but to exit the trade, but it could re-trigger. And so the challenge trading like this, where you're trying to get the tight stops like we do, is you have to be ready here to take an entry again. Yeah. And your stop now goes at the below this low, and your entry would be here, and you'd be looking for the same basic. Well, stop. Go. You'd be looking for the same basic trade, like that. So in this case, wow, I'm gonna have to like lock them out. You just won't stop. In this case, you got a nice higher low, but this can be really nerve-wracking, this pullback here. Especially if you took this stop here, and then you're like, I'm going to get back in, right? So you lost, so you're down, it would be here. So you're down, let's say 15 points, maybe with some slippage or whatever. And now you're getting back in with a 12-point stop, again, basically. And when it comes back to the swing high, it like peaks up there with a pink bar and then gives you an aggressive signal down. It's really tough when you're down on the day, you just took a stop in this exact spot, and it appears that it's not working, just because that's what the market's built to do, is kind of deceive you. It's really easy to scratch the trade here, because you got in here, and so when it comes down and it, your stop is way down here, so it doesn't come anywhere near your stop, but there's this sense of like, you just feel like it's going to stop because it's pulling back again, just like it did here. But the truth is that pullback, this here, this is what makes this possible. So something I've really been working with, like in like meditation and visualization and stuff, is to be sure that I'm not looking at that I'm not looking at this. Sounds like a baby. Go. That I'm not looking at that as like a threat, because this pullback, like I said, is the only way we're ever going to break through all this. because we have longs. Here, I'll show you. So the star and the pink diamond behind it suggests that like aggressive buyers got in here, and they got stopped, or at least are offsides, right? So they aggressively got in here with a decent amount of volume, and then right here, whoops, oh boy, what did I do? Can I undo that? Wow, that sucks. Reset. No, that's not what I want. Ugh, sorry, I just accidentally did something I did not want it to do. How do I do that? Thought there'd be a undo. Okay, so no, not that. Wow. Yeah, none of these is what I had added. That's annoying. I don't see any way to go back. Okay, so we'll just have to rebuild this quick. Wow, that's annoying. Sorry. I've never done that before on a live stream. Okay. Like, of all the places to click on accident, I grabbed that. Okay. So I need this one. All right. There we go. Okay. So these guys are offsides here. And that's basically why this first attempt fails, is when these guys, the double star, aggressively bought, they ran into aggressive buyers from earlier up high and they exited. So here, if you look, this is where most of the volume is in that bar. And they couldn't quite reach it and they quickly sold. So some people were expecting a breakout, bought in here, were offsides, had the chance to exit around break even, and took it. Maybe even took a loss. Then price came back through that level, and not surprisingly, sellers tried again to push price down. And that should make sense. If you're a seller, you just saw a buyer get trapped, go back to his buy point, and give up. So from that perspective, that looks pretty bearish. On that tiny time frame, for instance, if I pull up the 5 tick here in that same location, here's on the 5 tick over on the right. You're not going to see the signals, but you'll see the Renko. Well, some of the signals, but not all of them. You don't need them though. But look how the longs had some success, but then that low down here. So longs have some success. They get a little bit over zealous and then immediately reject here. Well, took them a couple tries, but eventually they give it up right there. And then they have a chance here and they sell, and then they came back up to it and they sell again, right? So when you see that and you're bearish, you're thinking, hey, this is a pretty good place to sell. Every time we go up there, buyers are selling. So they take it up there and then they rip it down. So, and they do it again here on a tiny time frame, here on a tiny time frame, right? Over and over and over again, these mean reversion traders are taking 4 points, 3 points, 4 points over and over again, right? Just working this area. So here, if we can look at it like this. So if I make this, so imagine you're a high frequency trader and your algorithm finds places where where buyers got trapped and are now trying to look like they're trying to exit their trade for a loss or at break even. You are looking to sell all of these over and over and over again. You're not expecting a breakdown. You just want to take price back to support over and over and over again. And if you do it enough, you'll pay yourself enough so that when they do finally break it out, it won't cost you that much because you'll have already built so much. See, you could actually take this even lower. I'll show you. So if we use the bigger time frame to draw this, hold on. I'll show you exactly how this would work. Okay, so let's say you're a high frequency trader and you're like, I see buyers up here getting stuck. And so I want to be bearish on a smaller time frame because they're going to probably exit if we get any lift. So you might see this and immediately think, okay, I'm going to sell that because we're right back to that level. And as long as I've got an aggressive seller on the DOM, which you could see, I don't have all the signals showing here because it's just too fast. But you could see it on the footprint or whatever. I mean, we could look there if you want. Yeah, I can see the star, so I know it's there. But is it the arrow? Yeah. So here, all these aggressive sellers coming in, and it's particularly the location of these sellers compared to like other things that shows that we're aggressively selling, not just bleeding. So here, that mean reversion seller is like, cool, I'm selling. And then a buyer shows up way down here, and that establishes for that mean reversion trader like an area to work. So now all he has to do is figure out where all the volume is in that move. You could do this manually or with the algo, but manually it gives me this level here, which is 14,387. So that's where most of the volume is. Just based on this drop and this retracement. That first attempt to recover. Make this a little bigger on this. I've got this on a huge screen, so, but I realize some people are watching on their phones or whatever. And for some reason I can't drag that. Interesting. I don't want it to get messed up again. But I'd like it to be as big as I can make it. Okay. So this is where all the volume is. We can do it here if this makes more sense. So you can't see it because it's covered up, but oops, most of the volume is down there. So if I'm a mean reversion trader, I expect price to visit that high volume area over and over and over again until the area is like claimed by either buyers or sellers. And this is just the way auctions work. This isn't something specific about this hour or this day. You can literally do this anywhere you have a trap trader. So we zoom in, we have that 387 level as our primary target, okay? And then we want to be selling anywhere where we can get good risk reward, targeting that level. So can I sell this one? Yes, I have good risk reward, probably all the way to that bar. And then this bar here, not enough reward and too big risk. But you could see that this one hit our target. So right there, we would exit and then we'd wait for an opportunity to sell. If we saw an aggressive trader here, we could take a sell there. We'd exit here underneath that VPOC. It comes back up. We're looking for another opportunity when an aggressive seller comes in. He comes in way up there. So we sell that one, probably bigger because the risk is small. So we can risk the same amount of money with a bigger amount of contracts. And then it pays us again. So now we've gotten, let's say, one contract, two contracts, just to simplify the math. So we've already done this move like for 4 contracts and we're 4-0, right? And we're going from an average of, let's say, 90 to 87. So it's not a big move. These are little high frequency scalps over and over and over again. So in reality, we've just gotten like, we're not getting out exactly at 87, but let's say within a point or two. So just for like round numbers, let's say that we target 4 points every single time we get in, and we did it 1 contract, so that's 4, and then 1 contract, that's now a total of 8. And then we did 2 contracts, so that's another 8. So now we're up 16 points per contract or whatever. Or no, just 15 points. 16 points total. Comes back up to our level. We can sell that one. Comes back down here. Now this one, we might not have gotten paid much because it bounced right off the level, at the level right there. So we want to get it back up here. Right there. So we sell that one. So we'll call this one a scratch. Although I don't know if it would have stopped really, but I don't think I would have held it past break even if it bounced like that. But I definitely sell this one, and then we'd get another 4 or more. And I'd be out right there. And then it comes back up again. Now it did not get to our location here, so I would have missed that one, but I've already gotten 1, 2, 3, 4. Probably could have taken 2 here also, so 5, 6, and then nothing, and we'll say scratch. So nothing to do. See how they can't get it up here? So I'm just skipping those. Nothing. There we go. So that one's really good risk reward, so I'd probably take 2 again. So now I'm up 8, right? Times 4. That one didn't quite reach. We'll say it's a miss. And now they go lower. So the bears took that location. If we wanted to keep doing it, you could try it there, but it's dangerous. Because if the bears took that level and then they give it up, chances are it's going higher. So for me, I'm done with the trade here. I'm done with the mean reversion trading right here. Now, look what that looks like on the tradable time frame. All we see on the tradable time frame is a move up and a move down. There's no way I'm going to get 32 or whatever I was at, 36. I think it was 32 points here, right? When the market moved 12. There's no other way to do it, but the mean reversion high frequency trader can make 32, 36, maybe even 40 points with very low risk just during this little move because of this trap trader. On the higher time frame, what I'm looking for is I want to see that high frequency trader get greedy. So my best move on this time frame is going to be reclaiming this aggressive level. So if I can get the market back up here after it got underneath it, there's a good chance that greedy bears will have to cover on a higher time frame. Because remember, this is the low, higher low, second higher low. We know on the smaller time frame, The bears took it. But the higher time frame, the bulls are in charge. So they're just giving me a better opportunity here versus the guy who got long here, or here, I guess. Um, but it's essentially the same trade. It's just that there's more fuel because of all the bears that short this. So now, whoops, that was our. Okay. So now, well, we're going to see buyers show up underneath this low and what we call apex trap back in. So we got underneath an apex and then an apex low or a swing low, these little flags, the sideways triangles. We got underneath one and then we trap back into it in one bar. So one bull bar prints and the high is above the low that was that previous swing low, that apex. We've trapped back in, which means that anybody who got short, where is my erase? Anybody who got short down here is now off sides. So we can do the exact opposite as what we did on the smaller time frame. We can do that on the higher time frame. We can say, where are most of the aggressive shorts? Well, here's the star, right? So most of the aggressive shorts got in here, or else down here are the really unfortunate ones that kind of started it going. But the aggressive sellers were here. They shorted in after this low, expecting lower. They got tested. They shorted again. They didn't have any energy, and it came back on them quickly. And it just illiquid rising, right? They're going to cover like a lot right there. But the challenge is when they don't immediately give up. And this is where I was before I went on this tangent. So what we see next, because remember, if you've watched any of my streams before, and this is going to be important in a minute when I talk about two really key setups that I'm using that work really well. These pink bars are signs that the market's moving up primarily because of illiquidity. The order book is thinning, and that's causing price to go up. But we don't really know if there's any natural buyers in here or if it's just very small time frame or buyers like momentum traders just like following price, or if it's sellers who got trapped down here just getting squeezed. And then purple is the opposite of that. So low liquidity causing price to drop without needing any like natural selling. Even if you didn't have any natural selling, price just naturally falls due to orders on the order book getting pulled. So the decreasing liquidity leads to lower prices. Usually what you get after that is a retrace or a re-auction, so which is the same thing. So if we find these pink bars here, pink, we should expect in a normal market, a balanced market, we should expect that entire range to get retraced relatively soon. And if we go back to other pink and purple bars, we'll see the same thing. So here's some pinks all together. And you can see the first try, they retraced some of them. But on the second try, they retraced all of them. And that's where the aggressive sellers came in. Then the purple bars, this one got immediately retraced. And this one got immediately retraced within a bar or two. It was retraced, and the same thing on the other two. If you look to the right, we have purple bar immediately retraced, and then this one didn't get immediately retraced on the next two bars, but shortly thereafter, they retrace them, right? So, and that's normal. That's just the auction wants to know, wants to be more certain that prices that we've left behind due to illiquidity actually have had some like battle over. They want to see real buyers and sellers duke it out and make sure that they're following the right direction. Because if we don't retrace it, no one really knows whether or not there's buyers or sellers waiting at that level. They might be able to look at the order book, but they don't know what's going to happen when price actually gets there because people pull their orders, they spoof. So we want to be watching for situations where the pink and purple bars don't get fully retraced because that is atypical. So here, it doesn't look like much, but they missed by a few ticks here. See that difference? Oh, when it shows up. There we go. They were unable to fully retrace the low of this pink bar here before they lifted off. And if you look at the smaller time frame, they lifted off with pink bars, meaning there was sellers in the market here, but once it didn't go any further and they ran out of sellers, all those sellers in the order book here pulled their orders for like 10 ticks. Just everybody out. And then, not surprising, you get a squeeze. But the location of that is critical to understand. Here's how we can use that to make money in trading, or how I do anyway. When I see this, I don't want to be short. No matter what you think about the higher time frame or macro or anything or news at the moment, it doesn't matter if we can't take back that pink or purple bar. Think about it like a tiny little low volume node. If you've looked at any profile, I'll show you. Here, we'll bring up CL, right? We'll bring up oil. It's all the same. It doesn't matter what like more or less, it does not matter what market you're looking at. If we can find a low volume node anywhere in here that's not fully retraced, the result is going to be price leaving the area very quickly. So the volume is the gray here. So here is a low volume node. See that? And then here is a low volume node. Here is a low volume node. We couldn't retrace any of those, right? Until we do, assume bearish. When you try and they fail, assume bearish. This one got retraced, and all the ones below it got retraced. And then this one up here got retraced. See that? That one got fixed or repaired. This one initially did not. And what happened? Price went up until price came back, tested it, and went through it. So guess what? That is fully repaired. We don't have to worry about that anymore. It's no longer relevant from a trade location point of view because we've already traded through it, and so it's already been repaired. Now look, here's another one, right? Now this is holiday. No, it's not. Not yet. This is no, not single prints, just very low volume. Now, so see how they couldn't retrace it? Bearish. Look at this one. Couldn't retrace it. Bearish until we do. This one got retraced. And not surprisingly, we go lower. And so you can do the same thing with NQ on the profile. Although here it's going to be all bullish on this time frame. But let's see here. How can I make it? There we go. So we have all these single prints, which are usually going to be low volume nodes or low volume areas. Until we retrace those completely, if we approach it and we can't retrace it, it's bullish. We need to wait to actually see them try, though, to get the trade opportunity. It's not a trade unless price tries to get there and fails. So here, the trade was here. You can see, let me make sure that this is nice and big so I don't mislead anybody. So if I take this low volume node and I'm going to put a marker here and we're going to color that blue. That is the low of that low volume node there. There are more of them, but that's one of them. So that blue line down there, down here, as long as that's not breached, it's bullish as long as we approach it. So here, I can do it on a higher time frame. Let me show you. So on the really big time frame, I gotta show it. Okay, so that blue line right here, it put it in here, low volume node, aggressive traders, right? Pink bars. If we can't retrace that, it's bullish. Look right here. Oops. We get a wick into this pink bar, but it can't take out this low volume node, which basically starts at this pink bar and goes to this one, give or take. Let's say this pink bar here is basically what it is. They approach it, but they can't fully retrace it. And instead, they go higher. It's bullish. Do not be short. Right there. As soon as you see this wick and this aggressive buy close, it's not bearish. No matter what. Like, it's just the rule. Can it eventually retrace? Yeah, it'll retrace. Just give it a day. You know, don't be stuck on like thinking that the auction must do this today. Just because we usually repair low volume nodes doesn't mean we have to right away. And even more so, if it doesn't, but it tries, there's a trade opportunity there. You just have to be willing to flip your brain from thinking it's bearish because we're retracing, and then you see them stop and turn around aggressively. It's like, you got to drop whatever ideas and sentiment you have and just accept, look, it might be bearish on a higher time frame, but until we close that low volume node, which is going to be treated like a gap, basically, I can't be short. I don't want to be selling. And what happens, it goes straight up, right? And that is literally normal. That is a trade opportunity I see every day, all over the place. So let me show you a really easy way, at least with the algo, but you can do this if you have a profile. You just have to draw it over and over again. You won't have a visual notification that there's a low volume node, but if you know how to look for one, you'll find it. And this is way easier to do on a higher time frame. Doing it on a 15-tick Renko chart would be really tough manually, but with the algo, it's not that hard at all. And it means I can have a stop the size of like 10 points. So my biggest loss might be $200 a contract. Yeah, and that's how you can trade with bigger leverage. But even if you don't have the algo, you can still use this concept as long as you understand what we're looking at. So what we're looking for, it's going to start, if you're looking for a buy, we need a purple bar, and we need that purple bar to get beat. In other words, we need to get volume developed above it. Why? Because, like we just said, until we do, we have to assume it's bearish. It might not be a good place to enter bearish, but it's not bullish until we retrace it, right? Because every one of these little purple bars on a tiny, tiny, tiny little time frame are points where price just moved due to illiquidity. It was not natural. Price wants to go back there, and if it can't, that's bearish. So, like I said, we know that there's a trade entry opportunity when they don't retrace, but that one's rare. The more common one occurs when they do get retraced, and then you develop volume beyond it and put in an aggressive signal. So we're going to be watching, when basically asking the question, have purple and pink bars been fully retraced? If the answer is no, we have to look for a trade in the opposite direction, right? We want to follow the pink or the purple bar that's not getting retraced. So if the pink bar is closing bullish and it can't get retraced, we're not worried about the reversal. We just want to be bullish. But normally you're looking for this to retrace fully, develop volume above it, and confirm that we've overcome it, right? But if it can't, you have to flip. So the normal setup is purple bar for bulls, for buys. Purple bar, then get the VPOC, the yellow line, which is the VPOC of the bar itself, as if the bar is like a full day, but it's just a 15-tick Renko bar. This is where most of the volume is. The mode is way down here. We need that volume to develop above the purple bar. Now, there's one more caveat, and that is if you've had a lot of volume above you, if you're looking long and there's been a lot of volume put in above, and you might have trapped buyers, you need to reclaim that before looking for a long. And you'll see, even without that rule, this setup still works maybe 50% of the time. If you can identify the potential trap buyers and weed out those trades, this is like a 73% accuracy trade. So it's a matter of seeing it and knowing what you're looking for, and then being able to manage the trade. After that, they all look the same. So to identify whether or not volume has developed above us, we're going to be looking at this dotted line. See that? It's white when it's neutral, it's pink when it's bearish, and it's blue when it's bullish. I don't really care about which direction it's going on a smaller time frame, but I am watching for where it has developed, because it's gonna be support or resistance depending on where it is relative to us now. So we want to look where that low volume node was put in, the purple bars or the pink bars, and we basically just want to visually mark, or at least be aware, that wherever volume was, the majority of volume, that's the highest, right? It's either there or here. So you can see the dotted line came down, it established here, we popped price up, and then they reversed it. And right there, if you look, the dotted line went up and price went down. That's going to be where they get trapped. If there's a spot where buyers get trapped, it's where you have the line turn blue, like this, blue, 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 blue. They're all over. The line turns blue, or volume's developing higher, then price reverses aggressively. So for instance, back to the left where I'm pointing up here, the reason price couldn't break through this high actually was due to the fact that you had buyers stuck up here. So see how they moved up and then they had sellers go through that. So volume developed higher. We can see that dotted line, the yellow one too, but you can think of the dotted one as like a higher time frame VPOC. It's actually a developing volume point of control, but it's been tweaked. It's not going to be the same if you just tell it to put the developing volume point of control. I tweak it, but that's the concept. So let's mark this. We're going to assume, since there was a purple bar here, and remember, on purple bars, you've got buyers pulling their orders. And one reason buyers pull their orders is because they were planning on defending an area, like they're long from a higher and they were going to buy more. But then they saw something maybe on the order book or speed or whatever that changed their mind. And the result of that often is buyers getting trapped, especially if that purple bar is not retraced. So what you'll see here is purple bar with volume, the dotted line above it. That right there is dangerous for buyers and a good sign if you're bearish. And now we want to see, do we fully retrace that bar? Because if we can't, it's bearish, right? So we can put the line there and we can say it's neutral if we retrace it. If we can't, we don't know. It could be, if we can't, we know it's bearish. If we can, we're not sure. It could be neutral, bullish, or bearish. So at the moment, we're trying to retrace it. And you can see that they do not fully retrace the bar. See that? They can't quite reach it. The reason, again, is because volume developed higher and people bought up here and then price dropped rather quickly, which is what that little diamond tells me. And the purple says it dropped even though you didn't really have any big sellers in there. They didn't need them. Everyone just gave up. And like I said, the purple not getting retraced and then this purple not getting retraced, all of that says buyers probably got trapped. We don't want to be buyers until sellers get trapped or buyers show up. So, like, in other words, we want to target this area. We don't want to trade here. If we're bullish, if you're long only, the last thing you want to do is buy where everybody is stuck, right? If anything, that should be your target to exit your longs. So you'd need to get long low enough that you could risk down here, enter here, and target this. So if you did that, if you bought this star, which I'm not totally against, I don't love it, but you could do it. You'd put your stop down here, but you'd have to target 21.75 and you'd miss it. And it would go lower because you're trading counter trend. So, and then you'd get stopped right there. And then if you tried to buy this star, targeting that, you lose 10 points. Again, to avoid that, just don't be long, don't be bullish until we've recovered some purple bars. So here we did retrace these, right? But this one up here has not been retraced. Keep in mind, usually what happens is the market comes up here, retraces, makes a higher low, and then goes higher. So there's really no incentive to be in the market when these are getting retraced. Just wait for it to happen before you make any decisions other than to be bearish. So finally, after trying to retrace, failing, and then rolling over, we see we had some capitulation here. The star is at the bottom. And so he can now get trapped. And one very cool thing about stars is the body of the star can be considered equal to a illiquidity bar, a purple or a pink. So for the yellow star down, this body here is basically a purple bar. And for these, this one is pink, but even for this one that's not pink, since it's got a star, this body is basically equivalent to a pink bar on a smaller time frame. Is more or less how it works. So when I say that something's triggered when something happens relative to a purple or pink bar, the alternative to that is relative to the body of a star. It's possible that X's and diamonds like this can also be kind of treated the same way. But for now, that's not always the case. So we're going to skip those for now. We're just going to see those as aggressive entry signals if the location's right. But what we're looking for is, like I said, for a buyer, if we're looking for a long, we need a situation where we have developed volume, or we've gotten the yellow and or the dotted line above a purple bar or above the body of a star down. And we need some sort of trigger, some sort of signal that buyers are taking advantage of the fact that we've fully retraced that bar. And then we also need room to the target, and the first target, needs to be wherever there were buyers trapped before. So here we said there were buyers trapped here, right? Right there. To right here or so. Like that area here. We could say like the body. Let's say that there were aggressive buyers in there. So that really should be our first target. If I'm buying down here, I want to be getting some of my risk off when we retrace this star. Because sometimes we're just going to rip right through it. But a lot of times we're going to retrace it and then roll over, or attempt to roll over and then bounce and continue higher. One way or another, I want to de-risk a little bit before that pullback if possible, particularly if I can see where that pullback is likely to happen. So here we had a star down, and like I said, that body can be considered similar to a purple bar. And we've gotten the dotted line and the yellow line both above it on a bull bar that's pink. It could be a triangle, a star, the arrow helps, a diamond, anything that a green bar, I believe, would work. Most of the signals, basically, as long as they're bullish and they're showing aggression of some kind. There's a lot of ways to measure an aggressive response, but we need it to be in that location. It's got to have the dotted line and the yellow line above the body of the star or a purple bar. So once we get this, I can get in and target 10 points above and then hold a runner if it continues. So I get my risk off and then I'm holding a runner here. Now I'm watching for that retrace, right? That repair, which is here. Did it do it? No, not yet. So when I see this bearish bar, after attempting but failing, if you look close, it just missed it by like a point. That's enough to be concerned that it might be done going up for a bit. It may just be a higher low coming up, especially if we have some divergence here that on the like bullish divergence, that's very common. Here there wasn't bullish divergence. It was lower lows on price and the indicators. So there really is no reason to think that this low has to hold. When I see this purple bars not getting retraced, I'm going to assume it's still bearish on this time frame. So if I want to exit that small trade, that bullish trade, it makes sense. In addition, I can now look at the inverse. So I can say, well, do I have a star up, a body of a star up, or a pink bar that I can get under? And I've got to get under the dotted line as well. So there's a pink bar. I need to get the yellow and price underneath the dotted line. And I'm especially interested in where the dotted line was when the pink bars were formed. Now, I also have pink bars down back here. So that, but yeah, and if you look, it was not retraced fully. So that right away should be a warning sign that like short might not have very good risk reward. Because the first time we retrace it, it's very possible that we have buyers waiting there. So here and here would have to be our general target on a bear, on a sell. And we really couldn't get in it yet. We would need a triangle down or something else to happen after this. So there. Now, did we get the yellow line underneath the dotted line? I'd say no. It's at it, but not under it. So technically, it's less good, but it is equal to it, so it probably works. Yeah, it does. Okay. And in this case, it slips right through. And the reason is because the higher time frame, like we showed before, here and here, never retraced. So it's bearish on a higher time frame. So these tiny little bull retraces are easy. All you need to do is defend against a wick. So the buyers tried to respond here, but couldn't even get a 15 tick close. So, and then if you look, the purple bars do not get retraced. See that? So that right there, when it's a purple bar below the pink bar, so it's pink bar, and then below that is a purple bar. That alone, if you're in a condition that's bearish, such as you have purple bars that have not been fully retraced, it's probably a sell. Even here, pink, 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 and you put a purple below that, that is good enough for a scalp, but you need to have an idea of what's going on in the higher time frame, because up here you have support here, so it should make sense that they defend that. And if you got caught selling aggressively into this low, like a lot of people did with a star down there, that's a sign that you're being too aggressive, or you're not thinking about the bigger picture. You're trading as if you know that we're going to break this low when you don't know that. Just because there were sellers up here, and just because there were buyers that get trapped, does not mean that they won't defend the low. They usually will, because they want to recover this. And then when they do, now that you've gotten this transaction taken care of, you've gotten the long, he got stopped out, he maybe recovered, right? Decide he was able to get out at break even, and he's just happy to be out of the market. Now you can go back to being bearish and take out that low, most likely. Yeah. So that's usually how markets work. They don't just attack underneath support down here and just keep going. They collect liquidity, rip higher, trap somebody up here or here. They stop them out. They give them a chance to get out at break even, And if they take that opportunity, now it can go lower. Hopefully that makes sense. So let's look over here at the purple and pink bars, and I'll show you why you would know not to buy this, just one at a time. So again, for the buy, we need to get over either the body of a yellow star or a purple bar. And then we need to get a pink bar or a sign of aggression. Now, like I said, technically, I mentioned this earlier, this pink bar is above the body of that star. So if you weren't looking at the higher time frame, you might think that's bullish. The problem is you have volume developed above you on a purple bar, and you have not yet retraced it. So best case scenario, you come up and retrace that and then fall. So don't take those. But other than that, if you can set that up, it'll be a buy. So look what happens. Purple bar, we need to get above it with the yellow line and then be above wherever volume is developed. Did we get on a bull bar with the sign of aggression? So here, the yellow line actually went lower. Even though price went up, volume decreased. So this bar, the green one, and this is usually how green bars are, the outlined green, the bright green, that is a defender. He is defending this low and expecting a liquidity grab to result in a pullback. This works beautifully if you're at support, so it makes sense that someone would try here. The problem is you have unretraced purple bars and volume developed up here. See how it's like straight like that and then it just drops? That is your resistance. So that's going to cap your gains. So you could try it, but it's not going to work all the time. And the times it's least likely to work is if the very next bar can't get this yellow line above the purple bar. That's the most conservative way I know how to do it. So here, yellow line lifts. If this bar closes bullish, it's probably good to buy and target this. In this case, it closes bearish. It's bearish. So again, if you want a hard and fast rule, this is not a 70% accuracy trade setup, but in general, when you see these defenders, the green outline, if they get immediately beat like this or like this, it's probably not going higher. It could, but not usually. I'm not saying it never does, but if you have any reason to think it's bearish and you take out one of these green bars, it's probably bearish. So here, it's probably bearish. Now, remember what I told you about the short. If you have a pink bar or a white star and you get the yellow line below the body of the white star, and then you get an aggressive bar or a purple bar, that's probably bearish. So I don't know if you want to sell here because you're selling the breakdown on low volume, which kind of sucks. But if you want to be bearish now and sell a pullback, that makes sense. So like sell that or that. That makes sense. Another purple bar. But again, you can, purple, red, purple, it's dangerous for bears. They're not getting much follow through here. So again, if we can get the yellow line above a purple bar on a bull, we're good. Now this one, this triangle up pink bar did not achieve the yellow line above the purple bar. Note all of these purple bars got retraced. So our target on a long is up here, which is pretty good. Risk reward is fine, right? Because our stop would go down here, like I explained before. And we're above the dotted line. Everything's good, except that we haven't gotten the yellow line volume developed above a purple bar. So as far as we know, this move might just be a attempt to repair that purple bar, and they're just going to reverse it again. So I'm not buying that, but it does work a lot. So this one here does get the volume above here, the purple bar. See that? The yellow line and the dotted line are both above a purple bar. See that? So that's our first sign that buyers are trying to push this market higher. We just need an aggressive signal. And we didn't get a triangle. We didn't get a diamond. We didn't get a star. There's really no reason to enter right now. But if they can hold this low, it's probably safe to buy. So let's see what they do. They put a triangle or a star down. So now if we can get a bullish VPOC above that body, buy. And we can't. We put in a purple bar. So now we're going back to assuming that it's bearish as long as the next bar is not bullish. Because if we can't retrace this, we can't be buying. So we're no longer looking for a buy down here is the thinking. So see that how they try and then fail? This low is probably not going to hold. And now they put in the pivot and they take out the low with more volume. This is actually your better short because you've gotten purple bars not retraced fully, at least one of them. And you're not entering a breakdown on a purple bar. And we've gotten the yellow line and volume development, the developing volume control, the dotted line, below a pink bar. So the fact that this pink bar got fully retraced with price and we got volume underneath it right here tells me it's bearish. And here it's like you can get in on that pullback. As soon as that yellow dot shows up, I'm basically getting in. And worst case scenario, most of the time, it finishes retracing this. And then I know that I'm done with the trade. So risk reward's pretty good if you think there's any chance of it falling significantly lower. So they try to go lower and they put in a pink bar. Remember the rule for shorts, we need to get volume below pink bars. So if we get volume above pink bars, do we want to be short? No. So they lift it and you can see the VPOC line is not quite above the pink, but I don't want to be short anymore. It's enough for me to be like, yeah, I've seen enough. We're probably going to retrace this. Oh, I'm wrong. Okay. Good to know. So we did not. I see. They finally did get volume above it and closes bearish. So while this looks bullish, it's not enough to enter. And even though my sense is I don't really want to be short here, the truth is if they reverse, that's the only choice, either out of the market or bearish. And right there, it's bearish as long as we can't get a bull bar above this star body with volume above it. And we can't. So it's bearish. Pink bar. Watch out. Okay, did we get volume above the pink bar? Oops, we did not. Not quite. Did we get volume above the star? We did not. Not quite. So technically, it's bearish. Now it's not. Okay, so now, and I'm not surprised at this. So this one was not a good enough conservative signal to get me in on this time frame. And this one doesn't have a signal. So I don't have any reason to buy here unless I was short. If I was short, I'm getting out. And they do retrace the purple bars. Totally natural. It would happen in every market with the exception of the super bearish. So if we thought this looked super bearish, which I kind of thought it did, we know here that it's not. If anyone's been paying attention, we had one other hint that it wasn't going to go lower here. right at the open today. This is Monday. Um, we have, I said, the green and the red. When they get immediately beat, it's probably turning around, right? So green outline, immediately beat. It's probably not that bullish. Red, immediately beat. It's probably not that bearish. And they go higher. Red, immediately beat. It's probably not that bearish, right? And so the last thing you want to do is just short because you've got this sign of aggression. Because in the bigger picture, what's your target? You've got bears stuck down here, right? The red, the star. These guys are aggressive sellers at the lows that probably are trying to sell just to get out of the market. That's why they're putting this bar here. So we don't want to see this as bearish unless they get back down here, because that's not the expectation. Once they've retraced these purple bars, which again is normal, right? Because illiquidity brought the market lower. They tried to push again. It went nowhere. It came back, retraced that illiquidity. The natural thing for the market to do. It's like, hey, you guys still want to buy this? Okay, I thought so. I'm out of here. That's all it is. It's just a conversation, right, between participants. Here, it looks pretty bearish. They try. It makes sense to be bearish here. They fail. Don't be bearish. They did not give me a signal. Sometimes it's just not going to trigger, but I know I'm not bearish. Did I have divergence? I might have had hidden divergence here. That would be the only way that I can see to get this. It's too bad the line wasn't above the open of this star. Otherwise, it's so close, but no trigger for me. I think I can buy this pullback though, because again, I've identified that I know if this continues lower, I'm in trouble, right? Because we've already retraced this. So if I want to buy this somewhere in this wick and put the stop like down here, I think that makes sense. Because I know if it closes bullish, it's going to go. Right? Now, this is the easy part. How not to fight the trend. Just don't short until you've beaten a pink bar with volume, gotten the yellow line below it, or the body of a star up. Other than that, I'm buying only. And I'm just looking for aggressive sellers to trap, more or less, or dips to buy, more or less. And if I get divergence, even better. But until I beat a pink bar or a star up, I'm not interested in the short. Does it mean I will probably miss the turn? Yes. But I won't get destroyed over and over and over again. So here you can see they try to get under it. But when they do get the yellow under a pink bar, the buyers respond. So I can buy that. That's fine. It's also hidden divergence. Lower high on an indicator. That's the percent R. Higher high on our higher low on price. Purple bar star when we've gotten over an apex, also known as a supernova. So that's good. I can buy that. I knew that already. If I can get the VPOC, the yellow line, above this purple, I have even more confidence that it's going higher. Like that. So here, I've gotten VPOC, the yellow line, and the dotted line in this case, above where the purple bar was and above where the dotted line was on the purple bar here. See how the dotted line and the yellow line is way up there? So we pushed, buyers pushed higher, and they closed a 15 tick bar up there. Now, it might not be the perfect entry, but if I was unsure, if I wanted to risk off of this low, now I am confident that this low should get defended. I don't know if it does. It might not. it stops. So sometimes they're not going to work. In this case, one thing I might have looked at is the star down can be seen as a purple bar, and we could not get VPOC above it. So it could be that the stars actually have higher significance. And in that case, this was just retracing that star. So when there's a star at the top, like here, what I'm saying is it's technically not confirmed until here. But it's a little late for me to be taking risk up here, right? And I'd have to wait for another close up there. But that is the confident, high odds way to do it, is just be sure. Otherwise, identify that I'm way far from support. And I bet if I back up, we still haven't retraced some of those purple bars. And that's something I should have looked at. I was too zoomed in. We retraced those. But if I remember correctly, there were more. Yep. Right there. Oops. I moved the wrong one. Jeez. So that needs to get retraced before I can be confident that the bulls will dominate, basically. Doesn't mean I can't buy. It's just I need to target that area. I need to have risk reward to target that. And here, I don't have it because my risk is here and my reward is like right there. So that would be a reason not to get long. It's okay though. Right? Like you're going to take stops. I took plenty. As long as your wins pay for your stops, you're good. So purple bar, I need to get above that with volume. Can't do it. It's got to be on a bull bar. Doesn't happen. So we got all these pink bars over here. Do we have a bear set up? We need to get volume below that on a bear bar. Can't quite do it. Can't do it. Can't do it. We do it. Now, did we get it under the dotted line? Remember, it's wherever that dotted line was developed at the pink bars. So here, we got price below it. But not yet volume. It's probably good enough for me to take, but we definitely need price under there because if we hit that in reverse, it's just going to go higher. So if nothing else, you could get in here on that pullback. That's the safe one because now you've gotten volume below it. And so now pullback should get defended. And it's like, no way. Yeah. And now they try to continue. Now they may not get very far, but what they did do, I didn't mention, is they retraced these pink bars. They finished that and they did so with an aggressive trader. The star and especially with the red outline. So again, that's helpful for us, not only because it might be a good entry if you think it's bearish on a higher time frame, but also if it gets beat, we know not to be short. But there are some unretraced pink bars down here. So I don't think it's horrible to get short on this pullback. But then look, it immediately gets beat. When they immediately get beat, those red ones, it's usually done. Plus, if we can get volume developed above the body of the star down on a bull bar with a signal like that. Let's see. Oh, it did not get above it. Not quite. See that? Volume did not get above the bar with the body of the star down. The yellow dash is below the white line. It looked like it was about there when it was zoomed out, but zooming in, it did not quite make it. Had this been just a little bit higher, I'd say go for it. But here, no. And not surprising, it breaks down. Now we've got a purple bar So we need to get above that to be bullish. And we also need to get price above that little dotted line. Okay, and otherwise it's bearish. And look, they couldn't fully retrace it. So right away, when I see that, I need to immediately switch or at least get out of the long. If I took this incorrectly or took this one like prematurely, I got to get out of it and potentially just get short. Because to get short, you need to be under a pink or the body of a star up. And that occurs right there. See how this works? So it's just the same process over and over again, back and forth. So then we try short there. And then that one stops straight up, right? So, because this is a valid entry. We did not get above the purple bar. Oh, we had another. That's right. If you've got more than one, you can't unless it gets under the... Did it get under both? Maybe it got under both. Oh, it did get under both. So yeah, that one's just... this guy just didn't show up again. Yeah, he tried. Yeah, so they tried. And that, I probably stop out there. And some of these are going to stop. Okay, so now this, remember, is basically a purple bar, right? And then this is a purple bar. So this one is, oh, and then so is this. So I don't necessarily think we got to get all the way up here, do we? When we have a star to trap down here. This might not be enough. Yeah, and I don't know if I would take that. It does work. Oh, I see. That's right. Okay. So, worst case scenario, if you wanted to be conservative, which I think makes sense, if you weren't sure if it's bullish or bearish here, you need to wait until you get this pink bar here. And then you could say, okay, I know they're trying to buy it because they're lifting it above this star. And if they can get above this purple bar, I know it's going to go. So if you wanted to, the conservative way is to wait for this triangle up that's pink. That's the most conservative entry. But I think you could aggressively get involved here, personally. And once you see this, any pullback, as long as this low holds, is probably good to buy. Particularly if you had divergence like this. Lower low on price, and then it bottomed out, and then it couldn't quite reach the bottom on the percentar, so. All right. Under pink. Nope. Above purple. Right there. So this one... Oops, didn't mean to do that. This one gets you in right away because price goes up and the volume goes up. The issue here is that the dotted line developed up here. So the risk reward might not be very good. And it does break through it. That's a little bit risky. I wouldn't take it here when you're that close to that little shelf. But when I've got, 5 points, I don't mind. And then take some right there. And now you've got purple bars to get underneath. Or sorry, pink. So right there, it's bearish. Right? Now, did we have pink bars unretraced? Yep. Unrepaired right there. So that's my target. So if I'm going to get short there, I need to have risk reward to target that area. Can it go further? Yeah, but it might not. And right there, they bounce it. And I know I don't want to be bearish. As soon as that happens, it's like, get me out of here. Now, this is the first purple bar. And right there, they get above it, but there's no signal here. Nothing for me to do. Could they keep going? Yeah, there. That one I can take. This one. It got above a purple, I think. Yeah, above a purple. And it's got a dot, and it's pink. Totally cool. Okay. Okay, red. Immediately beat. We know that's usually bullish. So this is probably a buy. You can just keep going. Now, see how price goes higher, but volume levels off? It's not bearish, but realize that we can easily retrace whatever happens next, like the next wave or whatever, and come right back to this level without sentiment changing at all. So wherever you got in, you have to be comfortable with that pullback if you're going to stay in. So let's say you got a really late aggressive entry here, and you're like, I saw pink bars not getting retraced. This all looked bullish, so I bought this star. They couldn't get a bearish bar below the star body, so I added on this star. All of that is totally cool, right? The problem is now your average is like here at 30, let's say 14,430. So when you see price take off beyond the developing VPOC, now, yeah, especially when price is moving fast, you might want to take some off, because if this drop back to the developing VPOC would put pressure on you, psychological pressure, to make a mistake, like exit when you shouldn't, because it's like giving away 2/3 of your profits or whatever, or you're really heavy with a lot of leverage, you might just want to exit on a pink bar and be good, or go down to one contract and then hold that with a stop down here where it belongs. But what you can't do, in my opinion, is put a stop here above the developed volume, because then you're going to get stopped out, price is going to bounce, and you're going to get tilted. So what I'm looking for to know that I'm definitely done with the trade is one of three things primarily. It's seeing a star up get traded under with volume, like we talked about, white star body getting yellow line below that, the VPOC below it on a bear bar. Seeing a pink bar getting beat, getting the yellow line below it on a bear bar. Or seeing yellow like this, which is quote unquote overbought signal. Not like RSI, but based on like volume. It's not bearish just to see it. In fact, it often acts as support on pullbacks, those yellow. But if you want an aggressive exit or a very aggressive short, if they put in bars above that in the future that aren't yellow, like this, and those get beat, the potential for these yellow bars to get fully retraced very quickly is actually pretty high. So what I would do here is I would do nothing when I saw the yellow, and as long as I didn't see the pink getting beat here, I wouldn't get bearish here. But then when I see them go higher on a bar that's not yellow, I'm moving my stop aggressively to just under that bar, because if they can get, technically you can get price under there and you're good, but if you can develop volume down there particularly on a bar that's not purple, you can get a flush. So maybe my hard stop is like here, but I'm watching that level to see if bears can take it back. Notice it turns yellow again, so they're going higher. Yellow, yellow. Okay, so this last one was yellow, and then they turn it. Now, where are they probably going to go? They want to retrace these yellows. So I got to watch this one because it's not yellow. But then I also have to watch these because they're pink. If they can't fully retrace the pink bars, it's not bearish. Right? Did they beat the pink bar? Not with volume. Not yet. There. They beat this pink bar with volume. They're probably going to retrace at least some of the yellows. If they can get volume under this one, they're probably going to retrace all the yellows. So, do you want to short this? You could. If they don't take this, you got to be out. So right there, look, they can't get volume, the yellow line, underneath this bar with the dot. And when they do, they close bullish. That's not bearish. That is bullish. In general, assuming you're not trading into resistance, getting above these dots, especially if the wick of the bar is very small, if you can get a triangle underneath a bar that's above this dot, it usually rockets. Not every time, but a lot. So like that's usually a long. And if I was long this whole way, I'm actually adding there. The one concern is the dotted line on a purple bar is way up there. And my risk reward is awful. So the problem is if all they're doing is coming up here to retrace this purple bar, they're going to turn around right there where all the volume was. So if I do add here, I have to be super, super vigilant and watch for signs on a smaller time frame that it might be turning there. So thankfully here it didn't even try. And it does what it usually does, which is just go straight up. So there, see how we got a dot on a bar that's got a very small wick? That is dangerous. If we see a triangle down, it's probably going back here. We do have a pink bar that's not fully retraced. So it doesn't have to be bearish. But usually if we get the triangle here, it is. I have no way to short it because we have pink bars here that I'd have to target and I have horrible risk rewards. So this is technically a short based on the dots. Triangle beating a dot like this especially on a bar that has a very small wick at resistance. So that's technically a short, but my first target is retrace this, which is like right there. So I don't know if I love it, but it's technically a short. And not surprisingly, they just buy it. So the risk reward just isn't good enough to fight trends on NASDAQ. Like it's just not, in my opinion. Unless you have a reason to think that it's going to go through the support, just skip those. Even though they set up, the risk reward's awful. So here I have a purple star, right? But so since it's purple, and it did not fully retrace, I really don't want to be long unless I've beaten that. So I'm personally not buying this, but it probably goes higher. Yeah, not surprising. Now they didn't have a triangle here, so but it is pink. I don't know. It's risky. You're way at the highs. It probably does go higher. Yeah. But again, you've gone pretty far. Now notice yellow. We went higher than yellow, and they're not yellow. So that's divergence in volume. And if you look here, the wave has a ton of volume accumulated. Then we go higher, not here, but here. Well, maybe we went higher here. Hard to tell. Might be even. This one for sure. So if we turn around, that's a divergent volume bar or wave. So the potential for a bigger drop is higher now. But with the rules I'm sharing today, I'd have to wait till I beat that, technically. But do I see that it probably does turn around here? Yeah. And in real life, I'm looking for entries here. but conservative, with a conservative size. Because this happens a lot, where it just retraces the pink and then bounces. And then they'll suck up liquidity and then roll it over. So I might have gotten 10 points there and then quickly exiting. As soon as I see that, I'm just like, not again. And again, since it's pink, you could technically buy that. The line is not in the right spot. It's got to be above this. So, oh wait, purple. Yeah, not good enough. Plus I've got this dotted line up here. Nope, not doing it. Does it go higher? Yeah, but they just collect liquidity and now it's ready to go. I've talked about this setup before. If you get a ring followed by a triangle down and it's like not just going straight up, you've actually had an attempt to pull back and you've just like done a liquidity grab and then see this exact setup. It's great that it has a star, but it doesn't need the star. That usually goes straight down. Not necessarily through support, but it most likely is going to come here, if I had to guess. And then if you look, we had a pink bar. We got underneath the pink bar with volume. So, and we've got price below the dotted line. So I'm cool shorting this even if I didn't have the ring, but that open ring makes it better. And it almost stops and turns around before stopping. You can see the stop goes up here and it did not hit. The tricky part is you've got purple bar and then pink above. Technically that's long, right? But you're right at resistance. You've got horrible risk reward. And if you know this setup is valid still, you know you're bearish. Tough, but pink got fully retraced. Purple got fully retraced. That's just neutral. It's not super bullish anymore. Unlike this, where it's pink, can't get retraced. Pink, retraced, pink, can't get retraced. That's bullish. Pink gets retraced, now it's neutral. Pink gets retraced, neutral. Pink gets retraced, pink gets retraced. It's all neutral. It looks pretty bullish, but it's dying off. The momentum is slowing. Here's that setup here, to the bull side. So a pivot, and then a second pivot, ring, triangle up, straight up. Very, very common. And then it can be the opposite direction. Ring, triangle down, and then the next triangle gets you down. But either way, this did not stop. See that? So. And then where does it go? Right to support. Why? Because there's sellers there that become buyers. So that's support. Remember the green here? Those are defenders, right? They defend support. If you see the green at the top of the channel or way above this gray line, or the red at the bottom of the channel, way below this gray line, it's vulnerable. They are defending a level that's not supporting resistance. So like this red bar belongs up here, but they're down here. So this, and especially when it has a dot and with a small wick, that getting beat by a triangle is a huge tell that it's bullish, even without purple bars or stars to beat. Right there. You don't even have to get the, it's not purple, so you don't even have to get the VPOC above it. Just get the triangle above the getting price on a triangle bar above this dot when it's red and at the bottom of the channel. If you look back, that doesn't happen very often. You rarely have red down at the lows. And when you do, they get trapped. Here. Red at the bottom. Gets trapped. They go higher. Right? Does it have to happen right away? No. But this right here, even though it didn't signal the other way, it didn't get above a purple bar and I was frustrated that it didn't get above the star here with VPOC. It's technically still good enough because he got trapped. Oh, shit. I keep doing that. Sorry. At least I didn't cascade the windows again. Okay, so this guy got beat. And so now he's trapped. So if you look, if you mark the low of that aggressive trader, they snuck underneath him. And once they beat this, it's over. Because that was the last chance for this aggressive trader here to get out profitable. So once we're going higher than this, it's over. Now, you can do the same thing on the opposite direction. If you've got green outlines up here above the channel, above the gray line, and you get under it, it's bearish. So those are all in the right place. It's not the green inside, although this is also very dangerous. It means they're shifting volume higher despite the fact that you're at resistance. So look, this one is, it looks like it's at the bottom of the channel, but it's above the gray line, right? If you got above this, it's going to rip higher. So you do want to watch for it. But when this doesn't get broken, it's very bearish. Now, here's the other setup I was talking about, where you've got yellow and then not yellow, even though you go higher. Getting under any of these with VPOC on a bar with a triangle or a star or anything, that's usually short. I prefer to get under this little shelf here. So you could wait for this pullback, but it's bearish. Okay, now look, they get above purple right there on the triangle up, right? So they're at least going to come back and retrace that most of the time. Your risk reward isn't great, but it usually works. So you get a scalp here and then just get out because you've got, see that this is where I use the dotted line. So see up these little shelves, that's where buyers are trapped. They tried to buy here to trap him and failed. So that's your target. And if you were buying here, this is your target. They couldn't reach it. It's bearish. There are sellers sitting here. Assume there are. And you want to be those sellers. So if you saw this, that's your first sell opportunity because you've come back up to it. They've shifted volume lower. And they've not retraced all the purple bars. Boom. Okay, so star. Get under pink or stars, right? So here, it'd be the purple bar here for a scalp to the downside. And purple bar here for a scalp to the downside. Again, you're not expecting this to break down. You're just trying to get to support and then take 10, 12 points, hold a runner, who knows? Sometimes they're just going to rip back up, but sometimes they'll keep going. Okay, so pink, right, gets beat by a triangle down. VPOC developed lower. Look where the dotted line is on the pink. We're lower than it. Short. Stop. Up here. Most of the time, that's going to hold. If you want to wait for the better signal, it's this. Short. Right now, if we can get above the purple with VPOC and get a triangle, it's bullish. And look, we've got a low, a liquidity grab with a ring. So if we get triangle up, it's bullish. But look what happens. We immediately beat a green one. We know that's bearish. Stay short. Green, ring, triangle up. That I'm not going to be short anymore. right? Now, here we have a star here, but it's purple. So most likely this long probably fails because what I see here is a purple bar that was not retraced on this wick. So if they do come up here, they're probably just going to reverse. I don't know, maybe not. Yeah. So that's what I expected. It's just, this is bullish. The ring triangle up is bullish if it happens right under support. This one. This is there. We're in the middle of nowhere. We have not recovered the trap buyers. But see that little ledge there? We can't get over it. And if I mark that, what you're going to see is that's where the sellers were waiting.
Motion detected at the front.
Oh, hold on. Be right back. There we go. All right. Amazon guy was here. All right. So yeah, the location here matters, like relative location. But star up, get underneath that on a bear bar, right? But there's no signal on this one, so there's nothing to do. But then we have pink, get under pink, sell. So even if you were aggressive and bought this, you could just turn it around. And at this point, it's like, oh, okay, it's not bullish, right? Again, here's that setup again, if I didn't mention it already. I don't know if I pointed this out, but when they're, I know I said when you go lower than blue, if the blues go away and then you beat them, that's usually going to retrace. But also, if it's blue for just a little while, like 1 bar, 2 bars, and then you get an aggressive buyer to show up right there, you can treat these like a purple bar. This one actually happens to be purple, but yeah, I'm going to buy this most of the time. It's aggressive, but when the market's moving like this, like when it's just like rangy, you can be a lot more aggressive. And then the little background being orange here means there's delta divergence. Seeing that at support is great, assuming you get over it. Like if you see this delta divergence here and then they aggressively buy it anyway, it basically just means like there were more buyers than sellers in this bar, so they got trapped. Yet here's the buyers buying at that same spot, so they're just like undeterred. And you'll see that anywhere. Like, see how the orange on the background, see this orange, this orange, this orange, all of those are bearish delta divergence. So usually it's going to become resistance. See that? Because buyers are trapped there. Became resistance. So they tried to trap them here and just lost it. And then it became resistance. So you can kind of keep an eye on that. It's on a different time frame than this one. So it doesn't work quite as well on the 15 tick as it does on the 24, but it's useful enough to leave it on the screen, but that's what that is. And then this one's the bull one. So look, if this holds, it's probably bullish. Oh, and then even if you didn't have the blue, I think I showed this already, getting above purple on a triangle up, especially when it's pink, lifts. And then pink. Now this one I did not get volume low enough, so I'd miss this one. And then plus I've got this volume shelf and I don't like trading into that. That's not a good idea. But you did have one yellow all by itself getting beat by an aggressive trader. That's usually pretty good. Okay, so get under, oh, I said to look for the divergence. So look, they try to trade under it and they lift it. So that's probably bullish. Yep. And then they put another one in here, trapping sellers here. That's perfect. So this is exactly what you want to see, is they leave the area, they come back, trap sellers below the delta divergence, and then buyers show up. As long as buyers show up, it's all good. You don't just want to buy it, though. You just want to mark that area, note where the divergence was, see if buyers defend it, and if they do, it's probably good to go. No stars, no purple bars to trap. It's probably just going to go higher. There's no one to do any business with. This is the last purple bar. It had a dot with a small wick. It's probably going to explode over it. Kaboom. So see how they can't, so you have pink, but you can't get the yellow line below it on a bear bar. So there's just no reason to sell this ever. The stars by themselves they're just like sacrificial aggressive traders. Like, we just want to get over them. Once we do, buy, right? Yellow, let's see what they do with yellow. See, yellow, white, but yet we went higher. That's dangerous. This star I can probably sell. Otherwise, I'll wait for the triangle. Yeah, that's definitely a sell. How far is it going to go? I don't know. Look at how big this volume shift was. Most of the volume was down here, like 10 minutes ago. This was today's open. And then it shifted all the way up here and then promptly gave it up. So I don't know. I'd think this keeps going lower. Yep. Does it go right here? Let's see. Here's the shelf. Yeah. So I'm out of the trade and happy as can be if I get that. Like, that's perfect. Now look, delta divergence, but here we had delta divergence too. So look how this works. We are watching, we got 3 of them. So there's one down here. We expect buyers to show up down here. We expect buyers to defend this, but then there's sellers who should defend that. So what's going to happen if we come down here, we can't reach this, and we take this? It's going to go flying. Kaboom. Right over it. So this, I don't love this because having that shelf way up there means that there's probably a seller trapped. I'm sorry, a buyer trapped up there. So actually, I didn't see that before. See, normally I'd say purple bar, blue outline, beat them with the triangle, we're going to smash higher. But this shelf here and this shelf here, these are trapped buyers. So those are our targets. And then, like I said, we should have seen buyers show up like here. So it makes sense that they're trying to defend this. But all we have so far is pink, which is like prices going up, but mostly because sellers just kind of disappeared. So if they come in, okay, there's there's something. There we go. So as long as that holds, we're good. So now we can say, treat it like a pink bar and say, as long as we can't get volume below it on a bear bar, we're good. Oh, volume below it on a bear bar. I think it's below it. Yeah, so now that's bearish. And we shouldn't be surprised because there was delta divergence here. We traded behind it and they're probably going to defend. So if we can get back through this, it's going to fall further. And see, they love to dick around in here. Like, that's annoying, but it's just, this is why we put our stops behind the apex so that you don't get confused in here. But note, if you stick with the rules and you say, well, I can't buy unless I get above the purple bars, you got nothing to do here other than sell. So this is just like a pink. We took a short here. You could add here. It's bearish. And you can't let these little moves, especially when you have these volume shelves, like if we can't take that back, they're stuck and there's nothing we can do about it. Like, you can be bullish on every other time frame, but don't buy this because that's our target. Like I said 100 times already. Okay, so purple, but see there's 3 of them. So, and then this one's got a little wick with a dot. So that's got high potential, but look, we can't get a bull bar with VPOC above it. So bearish. And then, like I said, the stars are basically purple bars, the bodies. So there, that one's viable. So I can buy this. There we go. Okay, that's a star, right? So getting under this with volume, no, we did not. So it's still bullish. And see how they fuck with you? Like, chop, chop. Okay, I've got to get under that on a bear bar before it's bearish. Otherwise, I'm going to assume we're going to just keep lifting. They got under it. So I'm out of my trade. I would have gotten... See what happened here? It triggered here, right? Got over the star body on a triangle up that's pink. That's great. My target is these trap longs, the stars. And so when I get there, I have to take some off. The rest are just runners and they're free. I've already paid for the risk. My stop goes down here under 96 and I'm just going to let it go. And it rolls, right? And now you could, I didn't do this, but I believe it's smart to assume if I get another star and I get volume below it on a bear bar like that, like that's purple or it's got his diamond or it's orange or a star, I should be short, not long. So I should at least be cutting out of my runners and like grab some whatever profits left and potentially short it. I didn't do that today, but that's how I should be operating. It's pretty consistent. So here, see how I can't get above purple? And then star is like a pink, and I get below star, and it goes lower. Same thing, can't get above a purple with the yellow line on a bull bar. It's going to go lower. That's the sell. Goes lower. Purple. Have to beat this to be bullish. Have to beat this to be bullish. Have to beat that to be bullish. And you just keep going until you're wrong. I would definitely have taken some profits somewhere in here, but I'd have runners had I flipped it. I didn't. I actually just flat out I took profit and then gave back the same amount in my runner on the long, and I just missed all this because I wasn't being aggressive enough. So here again, note you can't get above purple, so there's no reason to long. That star means nothing unless we get it up here. And so now I see it as a pink bar, and if I get below it, it's a short. See how that works out nicely? And then we can stay short unless we beat this. So now if there's a triangle after this, because this star down is basically a purple bar, right? If there's a triangle here, nope, so nothing to do. There, triangle up, VPOC way up here, that's a long. Ta-da! And you get paid. Now they got underneath a pink bar on a triangle down. So now it's bearish. But remember, we have to ask, are we retracing the pink and purple bars? We have not retraced the purples. It's bearish. Have we retraced all the pinks? Yep. We retrace this one. We're about to retrace this one. We are not bullish, so we can short. Now, it might not work. There. That might be bullish again. Maybe not. That's the purple. We didn't quite get VPOC above, so probably not going to take that. Yep, and that's smart. And it just stays bearish. Cool. It did not trigger. So the trigger for the bear was here, and your stop goes here. And it did not stop. And it did not trigger bull because I didn't get this yellow line, the dash, above the purple bars on a bull bar. It did get up there, but it closed bearish. So it was within 15 ticks of triggering, but it didn't trigger. And that's what I love about this system, is that if you can tune it correctly, you can be pretty consistent. So now look at, this is what I was talking about before. When you get these red bars down here underneath the gray line, down at the bottom of the channel, this is suspect. If we can get over it, we can trap them. But it's bearish unless we do. Yeah, that's... Okay, so that purple bar followed by blue dot is usually pretty good. But I technically need the triangle up to put VPOC above that. Right there. That's good. Bye. That one fails. Oh, I forgot something. The volume shelf was up here. And we did not cross it. Damn. I did that in real life too. Yep. Got to keep an eye on that. So that, if you can't get over the volume shelf, you are trading into trap traders. They're trapped up here too. All right. Dot. Sometimes these create explosions. Purple bar. That can create an explosion. Oh. Oh, so close. On the line. What do we do with that? Not buy it. Gotta beat it. Not be equal to it. Okay. Star up. So these star up got beat by a triangle down. So that's technically bearish, but my target's the low, which is right there. Not a lot to do with there. Okay, so if I need a star down or a purple bar to get beat. So close. There we go. That does it. So that'll get me long. And off we go. And now that'll get me short. And that'll get me long again. And now, before I short this, what am I watching for? Pink bar is not getting fully retraced. I'm okay taking that because my risk reward is 1-to-1. But as soon as it can't reach right there, I might as well just get the F out of there. And then here, I'm buying. And look, my volume shelf is left way back here. So these guys are ultra trapped. So pullback should probably be bought. And I don't want to be selling. Okay, yellow, pink with yellow. So this is technically a short. How far does that go? Nice. Pretty good. Wow. Now, this purple got beat right here, right? So technically that could be a long, but my volume shelf is way back here. So I'm assuming we're doing some sort of a pullback. And I really want a liquidity grab if I'm not testing that there. Now that we've lifted it, and now I can look for the liquidity grab. So let's see if they can sweep underneath the low. Okay, so this one triggered long. Is it too late if I wait? Yeah, see that my intuition was this needs to develop up here, and I should wait for a low to get swept and then beat a purple bar. But here we had triangle down, I'm sorry, star down, triangle up on a pink bar, but your risk reward is poor. So usually I'd skip that. And then now that one's probably good. Yeah, tough. But this one is better than this one because we've already swept that now. And so there's a chance here that we take that high. We didn't, but the opportunity's higher after the sweep of liquidity. That. You want that lower low. I'd prefer it to be divergent, but it doesn't matter. It's still worth trying most of the time. This pink did not get beat by volume. And then you have the volume shelf here. So not going to be able to participate in that with this setup. Okay, star down, beat by triangle up. That should be a long. Did I beat volume shelf? Really close. Yeah. If you want, I guess if I want to wait, I can, because this would have been really hard and frustrating if it stops to get a. It is above the current dotted line, but it's not. Oh, and it's above the dotted line where the star was, which is what I'm basing my entry off of. So I think it's totally fine to take it there. You get a little bit of a pullback. You can buy any of this. Yeah. Okay, cool. And then pink doesn't get beat. Pink doesn't get retraced. We're not looking for shorts. Pink gets beat. Ouch. What happened here? Did I... Is there anything I can do with the smaller time? I still don't even have signals there. There's so many bars in there. Trying to see if I could have anticipated this. The only thing I see is this shelf is way down here, and they made this big lift, and that means that this whole area can easily be retraced. But I don't really have a great way to participate there. Too bad. Ring, triangle up. See that? That's usually good, as long as it's at support. Only problem is that shelf right there. Yeah, not great. I mean, it works, but doesn't give you what it usually does when you're not over this. This, if it was down here at support, it's a home run. If it's way up here, you're working against the grain here. No entry here on this time frame. That's too bad. Got underneath this volume shelf though, and so now lift. Oh, no triangle down. That's weird. This should be an entry, but there's no triangle. That sucks. Just didn't show up. Looks like there should be. Maybe a purple small bar is good enough. Okay, star down, triangle up. That should be a long. Yeah, that's cool. Neat. And then here too, star down, triangle up, boom. Nice little scalp. Pink bar with the dot, beat that. Oh, it's on the line. Is that not going to work? Doesn't work for much. Purple. Oh, see, the volume shelf is right here, so I got to be really careful. Yeah, we got over it. That's good. You bastard. Did it? Oh, I didn't get volume above it. I have to do both. Price above the volume shelf and VPOC, yellow line with the dash above the purple bar. It did not do that. So now I need to beat that. There. That one beat it. Both. Got volume above, got above the volume shelf. That should go. And your stop, remember, goes down here. They lift this one. This actually looks good too. That one stops. Some of these are going to stop. On a higher time frame, we are bearish. You can see here we have unretraced purple bars and we just can't break through it. Oh, and then here, unretraced purple bar. So that's a reason not to take that trade. Gotta watch for that. You're trading right into resistance here. Purple bar at the top. So here too, I probably don't want to be buying this, right? Because it's going to get stuck right here. Yeah. Okay, cool. Oh, and then is that good enough for a short? Right there, pink bar, orange bar, or do I need to wait for it? Right there, that's definitely a short. Oh, that one stops. Hold on. Let me take a look at this. Volume shelf is up here. Volume shelf got shifted down. Volume shelf is here. I got below it. Got below a pink bar. That's bearish. And then did not get above a purple, but I did eventually. It might just have taken 2 tries. Oh, nope. Trigger's long here. So it just stopped. I don't know. Something stopped. That's a long though. Yeah. So there were a couple stops in the morning. And then it goes. But we got that. And then this one right here. Lift. Can it beat this with a triangle down? Ah, not quite. That's too bad. Just missed. Triangle up. Purple. Way back here. Oh, this is purple. This is technically purple. Yeah, that's good. Yep. So stars getting beat by triangles is generally going to be good. Pink bars getting beat by triangles. Generally going to be good. Oh, unless your volume shelf is so far away. So no go there. It does take a little bit of concentration to do this right, because I'm getting a little distracted 2 hours into this. Okay, so pink bar, oh, equal, not beat by purple. Oh, and volume shelf way down here, so nothing to do. You just skip that. Pink, purple. Okay, so is that good? Ring triangle up. That should be good. Not much. Yeah, it just chopped in here. That blows. I got eaten up pretty good in here. Volume shelf's way up here. I gotta beat that. I can't. Oh, that's a short. Wow, that one stops. Just barely. And then that's a short. That one pays. So, yeah, you take a 10 or 15 point stop, but then you get paid 30 points. So you just have to stick with it, I guess. Unless I missed something, because this is the volume shelf. We definitely beat it. I suppose there's resistance up here. That could be seen as a purple bar. Fully retraced, fully retraced. I don't know. Higher time frame, maybe. So that's bearish. There we go. That should be a short. Nice. So even if I struggled through that little zone and took 2 stops, I'm back green now, because I'd be down 30, then even, then up 30, and whatever else this produces. Okay, get above. Star down with a triangle. Right there. Triangle up. Above the volume shelf. Yep. Nice. It's another 20 plus. See, there's no short there. The volume shelf's way down here. Nothing to do other than stay long. Now, volume shelf moved to here. And did we get volume below? Yes, by like 2 ticks. That could have been shorted. I'm pretty sure. Yeah, that beat it. It's risky, but I mean, there's a resistance here. Makes sense. And then that has to get beat to be bearish. Now, is there a bull trade? Oh, I missed it. I missed this. That's bullish, unless you get under this. Yeah, that's hard. You just have to decide, I guess. Is it bullish or bearish? And here you have divergence, hidden divergence, higher high on price, lower high on percent R. Can't really be bearish when there's bullish divergence. Pink can't get beat. Pink does get beat. Oh, yeah, and volume shelf is way up here. That's a short. You get another 15, 20 points. Can't get above this. Stay short, I guess. Oh, not in a triangle up. No triangle up. Stay short. Okay, that is probably going to be good to go. Needs a triangle there. Yeah, that's long. Oh, never mind. Volume shelf in the way. I freaking did that today so many times. I have to keep an eye on that. That's tough. Okay, but that's a short, right? Yeah, cool. And see, this is not a long because of the volume shelf. Okay, I can make that adjustment. That's not that hard. I just need to drill it into my brain that I don't want to take those. See, this one doesn't quite do it. Yeah. Now we have to beat this. Or this. No triangle down. The triangle's just not positioned correctly. That's too bad. You could probably take this now that you've got under the volume shelf. Yeah. Oh, blue all by itself. Triangle up. That's probably a long back to the volume shelf. So I'm out right there. That's just a scalp. Got to keep that in mind. That consistently acts as support and resistance. Okay. Especially with the trend. Get above the star body with the triangle. Can't do it. Get below the star body with the triangle. Below that. That's a short. Not much. Okay, defended. See the green? Right? And that's positioned correctly. So this probably goes higher. Did we get... not quite. Not good enough. Yeah. It looks like it's strong, but there's no bullish momentum, so it doesn't go anywhere. It didn't trigger long. It just looks dangerous if you're short, but it never does stop. It's just tricky. That one doesn't trigger. And that's good. Okay, that one does. Oh, volume shelf. Nope, gonna skip it. I'm okay with that. And then this. Volume shelf. Long, right there. Up to this volume shelf. Oh, beat pink. With a star. That's probably short. Wow. I missed a lot of trades, you guys. Like, going through this short, I mean, slow, one at a time, I'm missing a lot. If I just focused on just this method, I'd do pretty good. That's a long... No, it's not. Volume shelf in the way. Yeah, that'll ruin you if you don't see that. You need all the pieces to be there. Okay. Can I get under this with a triangle down? With a dot, is that good enough? Yeah, that gets you something. Oh, this one's not blue yet, it's lower, so that triangle up should be a long. Although, look, you got all these purple bars not retraced, so if they can get back up to this, I'm probably exiting right there. Like, I'm out of most of my contracts right there. And they just squeeze it, because why not? But notice here, they can't get VPOC on a bear bar below the pink. There's really no reason to exit on this time frame. Still. Now you get out and... But don't flip because did not get below the shelf. Now you did. So I'm probably out of the long here. And then here I'm thinking if I get a dot to short, like right there. Yeah. And then you can take the rest of the way. And then volume shelf is way up here. So you could probably target it. Yep. Get out. Beautiful. Now, short that. Stay short. Yeah. Yeah, I'm definitely just gonna have to do this from now on. Let me just see at the end of the day, because now that I've got the pieces figured out. So purple. Oh, star. Triangle up. Volume shelf is below me. Long. So the only way I'm shorting is if I get under that with volume on a triangle down. So if this closes bearish, volume shelf was up here. So it'd have to close bearish for me to be bearish. Otherwise, it's bullish. Hopefully that gives the idea of the like. It's. I realize it's a little complicated. There's like 3 parts. It's like figure out where the volume shelf is. Make sure you're not trading right into it, and then find a low volume node on a tiny time frame or a point of illiquidity, which I see as purple and pink bars, and then overcome that with a VPOC from that same bar time frame, and at that moment see a sign of either new aggression or continuation of old aggression, and ride it to support or resistance, and then flip if the signal flips, and just do that over and over and over again. And accept that it could stop a couple times, but it seems to me like the wins pay for the losses pretty consistently. So I think after looking at this more carefully one at a time, I'm just gonna try to do that process and just put on hold some of the new ideas that I was working on and see if I can just hammer away at this, because yeah, like having so many different setups that I'm looking for is complicated, and it would be nice if I could just like go to work, do my thing, and be done, at least for a while. And then if I want to consider adding more setups, I can. But this is clearly something that's working in this environment. It wasn't working when we weren't moving, but if we can keep having some good range, I'm just gonna do this very conservative method and yeah, see how it goes. Because I like I said, I tried today, but then and I did okay early, and then I tried to integrate some other ideas and just took like 3 losses in a row and got frustrated because it's too much brain work to have to flip back and forth and think about what setup am I looking for here and stuff. I think I'd rather just say I need this to happen or that to happen, and other than that, do nothing and be okay with occasionally missing moves, but try to catch more of these setups because they work often. All right, guys, if you want to get a hold of me, this is my contact info at Red Band Trader on Twitter. And then if you want to join us in the room for 5 days, talk to my coach, Simon, and you can talk to him about the algo too. Trade the letter N, word perform at gmail.com. All right, see you guys.